If you think about buying a home in Chicagoland, now before you start scrolling through listings or picturing your dream home, there's one important step you need to take, especially if you're not paying cash, and that's getting pre-approved for a mortgage. Without it, you're basically just window shopping, and in today's competitive market, that's not going to cut it. In this video, I'm going to be breaking down everything you need to know about getting pre-approved and how it's going to set you up for success in the home buying process. Let's get into it. For those of you new here, I'm Gaz Shihaber, Chicagoland realtor focusing on making buyers and sellers' home journeys as smooth as possible. If you're into real estate tips that are clear, practical, and useful to the Chicagoland area, make sure you hit that subscribe button and tap the notification bell. So what exactly is a mortgage pre-approval? It's basically your first big step in the home buying process. A lender is going to look at your finances, such as your income, your credit, and your debts, and they're going to decide how much they're willing to lend you. Here's why it's so important. First, it's going to show sellers that you're serious. You see, without a pre-approval, your offer doesn't really carry much weight. Sellers want to know that you got the financing lined up beforehand and you're ready to go. A lot of times, they're not even going to let you tour the property without having that pre-approval in your hand. Second, it's going to give you a budget that you can work with. Falling in love with a house only to find out it's way out of your budget, that's never fun. Pre-approval helps you focus on homes that you can comfortably afford, and it's going to save you a lot of time. And third, it's going to keep things moving. When you're ready to make an offer, that pre-approval letter shows that you mean business. Chicagoland's fast-paced market, being prepared can make all the difference. All right, so now we have an idea as to why pre-approvals are necessary if you're not paying cash. Let's talk about what lenders are checking when they're deciding how much to pre-approve you for. They're going to be diving into the nitty-gritty of your financial life, so it helps to know what they're looking for ahead of time. Here's the full breakdown. First off is your credit score. Your credit score is like a financial snapshot of your past. It's going to be telling lenders how responsible you've been with managing your money, paying your bills, and handling credit. A higher score means they're going to trust you more, and that usually means you're going to get a better interest rate, which can save you thousands of dollars over the life of your loan. If your score isn't where you want it to be, there's no need to stress about it. There's different ways that we can improve it. The first way is try to pay down any outstanding debts you might have. Make sure you're paying all your bills on time. And yes, even that $20 minimum payment counts. Check for any errors on your credit report and dispute them. Mistakes do happen more often than you like to think. Next up is your income. Lenders want to know how much money you're bringing in every single month. This isn't just your typical 9-to-5 salary. They'll also factor in side hustles, freelance gigs, and other sources of income. To prove it, they're going to ask for documentation like pay stubs, W-2s, or your tax return. Third on the list is your debt to income ratio, or DTI. This one's very important. It's going to compare how much money you owe each month to how much money you actually earn. And for lenders, it's all about the balance. If a big chunk of your paycheck is already going to credit card payments, car loans, or student debt, that could be a red flag. The goal is to keep your DTI as low as possible. If you're not sure where you currently stand, here's a quick way to calculate it. Add up all your monthly debt payments like credit cards, car loans, etc., and divide that number by your gross monthly income, which is your income before taxes. If the result is under 36%, then you're in good shape. If it's higher than that, then it might be worth paying off some debt before you start applying for loans. Fourth on the list is your lenders want to see what you got in your savings and investments. This could be cash in the bank, retirement accounts, or any other assets that you could tap into when needed. But why does that matter? Well, it's going to show them you got enough to cover any down payment, closing costs, or even a rainy day fund for emergencies. It's also going to give them confidence that you're financially stable, which can work in your favor when it's time to get the approval letter. So if you're prepping for a pre-approval, it's a good idea to take a look at these areas in advance. That way there's no surprises when the lender starts asking you questions. All right, now that you know what lenders are looking at, let's talk about the paperwork. Yup, there's gonna be a good amount of paperwork involved, but getting it together upfront makes the process a whole lot easier and less stressful. Here's what you'll typically need to gather: recent pay stub. Lenders want to see proof of your current income, so grab those pay stubs or anything that shows steady earnings. Side hustle income counts as well, so if you've been Ubering on the weekends or maybe you're running an Etsy shop, that's still income that they want to see. Tax returns for the past 2 years. This helps the lender see your overall financial picture. Even if you're salaried now, they'll want to check out your history to make sure everything adds up. And to my people who are self-employed or freelancers, this still applies to you, so make sure you don't skip this one. Bank statement. This shows how much you've got saved up. They're going to be checking for consistency and to make sure you got enough to cover things like down payment and closing costs. Here's a pro tip: avoid big unexplained transactions during this process. It might raise questions that you don't want to deal with. Identification. This one's pretty easy, but it's a must-have. They just need to confirm that you are you, so make sure all of your ID is up to date. Documentation for any additional income. If you're bringing in money from rental properties, freelance work, or even alimony or child support, it can boost your pre-approval chances. Just be sure to back it up with documentation. Getting these documents together ahead of time makes the process a whole lot easier. It's never fun hunting for paperwork at the very last minute, so take some time right now to get organized. Whether it's putting everything together in the physical folder or saving them digitally, having it all ready will save you a lot of time and stress, and it's going to show your lender that you're serious and you're prepared. Alright, so you got your documents in order, and now you're ready to take the next step. Now it's time to talk about picking the right lender. Trust me, this is just as important as any other parts of the process. Not all lenders are created equal, so it's worth putting in some extra effort to find the one that best fits your need. Here's how to narrow it down. First is by looking at the rates. Even a small difference in interest rates can make a huge impact on how much you're paying over the life of your loan. Don't just settle for the first rate that you're offered. Go ahead and shop around and see who's offering the most competitive deal. Second are fees. Lenders love to throw in fees for things like origination, points, underwriting, closing, and those numbers can really add up. Make sure you're asking for a clear breakdown so you know exactly what you're paying for. Nobody likes surprises when it comes to money. Third is customer service. They're going to be working closely with your lender throughout the entire process, so choose someone who's easy to communicate with and appears on top of things. Are they answering your questions quickly? Are they explaining things clearly? A lender who takes the time to help you understand the whole process can make the whole experience way less stressful. Taking the time to find the right lender isn't just about getting the best rate, it's about setting yourself up for a smooth and successful home buying experience. The right lender is going to make sure you feel confident and supported throughout the entire process. Alright, so the great news is you finally got your pre-approval letter, which is great, but it's not time to relax just yet. While the pre-approval is a huge step, there's a few things you need to keep in mind to stay on track. First, let's talk about your budget. Just because the lender approved you for a certain amount doesn't mean that you should max it out. So think about what works realistically for your lifestyle. Do you want to have room in your budget for things like dining out, vacations, or just saving for the unexpected? Stick to a monthly payment you're comfortable with, not one that's going to leave you stressed thin. Trust me, it's way more fun to enjoy your home and your life without stressing over every single dollar. Next, avoid making any big financial changes. This isn't the time to go open up new credit cards, buy yourself a new car, or splurging on furniture for the house before you even closed on it yet. Lenders can, and often will, recheck your financials before closing. A big shift in your credit or debt could throw a wrench in your plans, so go ahead and play it safe and just keep things steady until you sign on a dotted line. And finally, just keep your lender in the loop. If anything changes, like a new job, an unexpected expense, or even a big bonus, go ahead and reach out to them and just to let them know. They're going to be guiding you into how to handle it so nothing derails your pre-approval or slows down your home buying process. It's always better to over-communicate than to get surprised later. And there you have it, everything you need to know about getting pre-approved for a mortgage. I know it can feel like a lot, but taking a step now makes the entire journey a lot. If you found this video helpful, go ahead and hit that subscribe button and tap the notification bell so you don't miss any future tips. And if you're ready to start the process or just have some questions, you can find my contact info below in the description and in the comments. Don't hesitate in booking a call with me. Thank you for watching, and I'll catch you guys in the next video.